Hello everybody, my name is Rob Hay and I'm Head of Distribution and Investor Relations at Collins Street Asset Management. Thank you for joining us today and for the opportunity to share some insights with you into where Collins Street Asset Management see the ASX going in 2025, and in particular, some of the higher conviction positions within our flagship Collins Street Value Fund. Certainly, at a headline level, we continue to believe that the market is expensive. We are now in a situation where the Commonwealth Bank of Australia is the most expensive bank on the planet. And certainly, if we look more broadly across the large cap space, we're seeing companies trading on persistently high multiples. Something that for us, as deep value contrarian investors, is quite perplexing against the backdrop of a fragile Australian consumer who, on a per capita basis, have certainly been going through a recession as a result of weaker trading conditions and certainly a prolonged period of higher interest rates. Against that backdrop, however, we are seeing some very exciting pockets of opportunity, particularly in the gold space, where our basket of small to mid-cap stocks are really starting to find their feet. Production figures, as at the end of December, were quite strong. Companies are now selling their gold into a higher spot price, and even in some circumstances, actually stockpiling it to sell at potentially higher prices in the future. And we're seeing a number of industrial names with good quality management teams and solid balance sheets really bringing capital management initiatives into the forefront with some exciting opportunities throughout 2025. Now, those capital management initiatives, particularly for those companies that have been persistently cheap, could take the form of M&A activity. It could take the form of share buybacks or reinstatement of dividends. However, within our flagship Collins Street Value Fund, we have a concentrated portfolio of these very stocks, which we're excited to see go through into 2025. So on that note, I'd like to hand over to our Managing Director, Michael Goldberg, who'll share his insights into a number of our high conviction stocks, where we're seeing the disconnect in pricing and what the opportunity might look like over the medium term. Michael, over to you.
Thanks, Rob. We'll just go through a couple of our major holdings and identify where we're seeing value. I think the first one that we'll start off with is Carnarvon, which is one of our larger holdings. They've got a joint venture oil and gas project off the coast of Western Australia, their joint venture partner being Santos. The project is actually perhaps the largest discovery in the region for the last 30 or 40 years. So it's actually a tremendously huge project. Carnarvon is currently trading at about 13 cents, but against that, they've got about 12 cents worth of cash on their balance sheet. They've got another 8 cents worth of cash at call. We value their projects, I think, quite conservatively at about 10 cents, and we think it's probably about another 5 cents worth of upside from exploration. Again, that's a 13-cent current share price against a valuation that we think ought to be closer to 35 cents. Now, I think the dislocation is due to one major factor, that being their joint venture with Santos. Santos is the major partner, and so the timing of that project is in Santos' hands. And based on what we've seen recently from Santos, we don't think that they're going to focus on the project development, certainly not in the immediate future. And so we've been advocating quite strongly for Carnarvon to return a significant amount of capital back to investors. We think somewhere around about the 8 to 9 cents is appropriate. And what we think that will do is it will put into stark light the value of the prevailing assets that Carnarvon will continue to own. At the moment, the market's not valuing either the cash or the projects, and by taking one away, we'll force the market to focus on what remains. We think given a capital return, given the market's refocused on the underlying assets and the prospects of the company, Carnarvon should be trading much, much higher than the current 13-cent share price. Another company that I think is quite interesting and quite undervalued at the moment, certainly also one of the larger positions within our portfolio, is Seven West Media. Again, a deeply misunderstood business. And I think in an environment where traditional media, and particular traditional media channels, have been seen to becoming less and less relevant, I think the investment world probably misunderstands or undervalues some key factors. First and foremost, I think the importance of local programming is misunderstood or undervalued by the broader market. In particular, the value of sports to the television watching Australian public. I think another point that the market's missing is the significant value within the digital platform of Seven West. A couple of years ago, the digital platform was not representing very much earnings at all. At the moment, I believe it represents more than 40% of the company's earnings. And I think as well, it's worth pointing out that the fortunes of Seven are somewhat directed by the advertising market. And as we begin to see the early green shoots of a recovery in the economy, we expect that that'll be reflected in increasing ad spend. Now, management have done all that we could ask for them. Market share is up. They're the number one network in Australia again for the fourth year running. And they've got reach to 90% of Australia. I think it's probably closer to 100% if you include the digital channels. Even more pleasing, though, from our perspective is, Rob, as you mentioned, the importance of capital management. We've seen in the last year and a bit that management cut expenses by about 30% in 2024. There's expectations they could cut another $30 million in 2025. They've also bought back about $37 million worth of shares over the last couple of years, which adds tremendous value to the per share earnings going forwards. Despite all this positivity, the company's still trading at just 4 times earnings, which makes it just about the cheapest media company in the world. We think that with the prospect of a re-implementation of dividends, improving economic activity, and the long tailwind of the 7-year exclusivity for footy rights and cricket, that Seven West Media should be trading significantly higher. Again, at the moment, they're trading around about 15 cents. We think they should be trading closer to 30 to 40 cents. Rob, that's just a little bit of insight into 2 of our major holdings. Back to you.
Thank you, Michael. As we've been able to show with these 2 examples of high conviction positions within our flagship Collins Street Value Fund, for those investors prepared to look outside of the norm and consider some opportunities outside of the top 20, and certainly those companies such as Carnarvon and Seven West Media with strong balance sheets, great management teams and opportunity ahead of them, there is certainly potential for some wonderful returns over the medium term. Of course, that's not to say that there's any guarantee as to the particular outcome. We continue to monitor our positions closely and look forward to seeing what the rest of 2025 brings. If you have any questions about what we've covered today, please feel free to reach out to us directly. We'd be more than happy to answer any questions. Have a great day. Bye.